Hello, this is 경제, and let me introduce about Costco. Costco has wholesale warehouse club industry, and it has founded in 1983. The headquarters is in Washington, and CEO is Craig Jelinek. Sales of 2023 was about $237 billion, and market capitalization was about $293 billion. Looking at cost-to-cost cash flow indicators for the last 5 years, here are the following. In 2019, the current ratio was 1.01, which was close to 1. This was because the current assets and current liabilities were almost balanced, so the short-term debt repayment ability was good. In 2020, the current ratio rose to 1.13, meaning that the current assets increased significantly more than the current liabilities, indicating that cost short-term debt repayment ability improved compared to previous year. It fell to 1.0 in 2021 and then rose again in 2022 and 2023, indicating that cost current ratio is maintaining a good level. In conclusion, cost current ratio has remained close to 1 for the past 5 years, and its short-term debt repayment ability is stable. Cost debt ratio was the same at 0.66 in 2019 and 2020, but was slightly to 0.69 in 2021. This means that Costco used more debt for its operational and investment activities that year. Since then, 2022 has also remained at a similar level at 0.68, but decreased again to 0.64 in 2023. Cost debt ratio is generally maintained at the level of 0.6 to 0.7, and this means that it can be considered to be stable. The brief increase in the debt ratio on the way can be interpreted as a short-term change. In the future, it is expected to maintain a more stable financial structure through debt management and optimization of capital structure. Cost gross profit margin is generally in the late 12% range and is good. In 2021 and in 2022, it has been showing a decline, indicating that it has been affected by changes in the external environment, such as higher raw material price and higher logistics cost. It recovered a little in 2023, and since then, if the total profit margin can be maintained stably through continuous cost management and price policies, cost-to-cost profitability improvement and long-term growth can be expected in the future. Cost net profit margin was the same at 2.4% in 2019 and 2020, and then gradually increased year by year. Since the net profit margin is steadily rising, it can be seen that Costco showed good profitability. This means that Costco performed well on sales growth and cost management, showing its ability to generate continuous profits and efficient management. We can also expect Costco's stable net profit margin in the future. Costco's return of assets fell slightly from 8.49% in 2019 to 7.93% in 2020, but has continued to increase since then. In general, by showing a high return of assets of about 9%, it can be seen that Costco is generating profits through efficient use of assets. Most recently, in 2023, it fell 0.02 percent point compared to the previous year, but remains high and is expected to continue to use assets efficiently and generate positive profits. Thank you for listening to the presentation.